Good afternoon, ladies and gentlemen, and welcome to the SCIROCCO Energy PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we will notify you by email when these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Tom Reynolds. Good afternoon, sir.
Thanks very much, Jake, and good afternoon, ladies and gentlemen. Thanks very much for attending the webinar. The purpose of this is to effectively describe, as it says on the screen here, that you're looking at the proposed Rovuma disposal, and also to give you an opportunity to raise any questions that you may have about that and the current status of the company. And I'll be happy to address those questions at the end. What I'll take you through is a short presentation, should take about 15 minutes, no more than that, and then we'll take questions after that. So first and foremost, I just want to flag that the presentation and the contents here are a summary of much more detailed information that's available on the company's website, and basically for guidance and full detail, any interested parties should look at the company's website and refer specifically to the circular that's available there. So first and foremost, where we are today and where we want to be. And really, I wanted to start by setting out the timeline of where we have been over the last 2 years, since 2020, in the life of the company. And as I've laid out here, timeline of the new strategy development. And I want to be really, really clear with everybody. Back in Q2 2020, April, I think it was, we announced the intention to sell Rovuma and the launch of a marketing process. It got off a bit of a slow start due to COVID and a little bit of a disruption, but that was our intended announcement at that point in time. Later in 2020, in Q4, we set out a new strategy looking to target sustainable energy assets. And I'll cover that in a bit more detail later about why we think that's a good idea and why we've continued with that. Q2 2021, we expanded on that new strategy in a lot more detail and put out there what our first investment platform company was going to be in the form of a partnership with EAG. We then moved forward into an AGM in July 2021, which included a vote approving new investment policy, a vote that was approved by 99.6% of shareholders voting. In Q3 2021, on the back of that vote, we then completed the investment in EAG, and we supported EAG to acquire its first anaerobic digestion plant in the form of Greenon. Later in 2021, we announced an exclusivity arrangement with SEM Limited to provide technology and equipment to manage and process the digestate material from AD plants. And we believe this gives the company really first-class access to a technology that has the potential to add very significant value and revenue streams to the AD plants that it acquires. And then throughout Q4 and Q1 this year, we've provided consistent quarterly updates covering the asset progress, particularly in EAG and Greenon that's gone on. And so really, I'm presenting this timeline because I want people and investors and shareholders alike to be very clear that this new investment strategy has been very clearly communicated since 2020. Our actions as a company and as a board since that time have been completely consistent with its implementation, including the announcement on Monday of this week relating to the disposal of Rovuma. And I want that to be important context as we go through this presentation. So let's talk about the Rovuma transaction. The total consideration that's being offered by Wentworth to acquire Rovuma from SCIROCCO is up to $16 million, and it's made up of 4 tranches that are listed here. There's an initial consideration of $3 million payable on completion. There's a further $3 million payable on final investment decision being taken by the parties. So that is the then prevailing joint venture for the Rovuma asset making a decision to take a development forward. The next bullet is a deferred consideration, which is up to $8 million payable in the form of a net revenue share after the field comes into first production. And then finally, there's a contingent consideration element of $2 million It's payable to Scirocco by Wentworth if gross cumulative production exceeds 50 BCF from the licence area. In addition, and this is a critical part of the entire deal structure, which we took into consideration in accepting this and recommending it to shareholders, is that Wentworth will provide Scirocco a loan of up to $6.25 million to meet all cash calls linked to the Rovuma JOA between 1st of January 2022, which is the effective date, and completion of the deal. In terms of that loan, the first $3 million doesn't attract interest, and as it says here, the amounts above that will attract interest until such time as security is perfected and approved by the Minister of Energy in Tanzania. So, summarising this, this is a significant amount of consideration. It's on the back of a 2-year marketing campaign for the asset, and what I would stress is you don't run through a 2-year marketing campaign if you have deep, solid, competitive interest for an asset. And this total consideration represents a very significant premium to Scirocco's current market capitalisation, which I think is an important value consideration. Obviously, as part of our role as an investment company, and particularly Rule 15 of the AIM rules, we're obliged to seek shareholder approval because this is a significant asset, and a general meeting has been called for the 29th of June, which I'm sure investors and shareholders will be very aware of. So what's the rationale for why we are pursuing this disposal under the terms I've just described? First and foremost, the deal strengthens Scirocco's balance sheet. It also allows the company to pursue and accelerate the strategy of building a portfolio of cash-generative, sustainable energy assets that we've described before, including supporting EAG further in its efforts to expand its portfolio. A very significant and critical part of the consideration here is that the loan element of the proposed transaction removes very material expected dilution that would be associated with the imminent need to raise capital to fund the Rovuma work programme. Also, I think it's very important to understand and make clear to everyone that completion of the proposed transaction follows a very lengthy formal sales process, 2 years. It's been as frustrating for us as it has been for investors and shareholders. And I think what that really highlights is there's a limited buyer universe for assets of this type and assets of this type in Tanzania. And it's taken a long time to land terms that we felt are acceptable and allow us to get on with the next part of Scirocco's life. I really want to stress, really taking into account that 2-year sales process and the process we've been through and the number of options that we have attempted to land during that period, that the deal is the best possible deal available to Scirocco. It allows us to crystallise solid value, as I've just described on the last slide, and it allows us to retain value upside linked to a success case in Rovuma, which is not guaranteed, and it removes critically the material downside exposure to those ongoing cash calls associated with the project. So the board recommendation, and this is very clearly set out in the circular that I referred to you at the start of the presentation, but to summarise it here, the Scirocco's board of directors and me as the representation of management strongly recommend for shareholders to vote in favour of the transaction. It avoids highly dilutive equity raise in the near term to fund activity on the licence if we were not to sell. It removes exposure to meaningful project uncertainty from the activities here. And I think this is an important point to dwell on for a second, that there is no guarantee that the Chikumbi 1 well that's proposed here discovers gas in that location. There is no guarantee that this confirms a large areal extent of gas in the subsurface that is then capable of a very significant development. And there's no guarantee that that project moves forward on the pace that is generally kind of understood and being described. So there is a great deal of subsurface and project uncertainty involved in that asset. And by selling it, we take Scirocco out of that and allow ourselves to pursue a much more predictable growth curve by pursuing the assets we've described, and I'll come on to in a moment. I think another critical point in support of voting for the transaction is that avoids the longer term requirement for a large capital expenditure. And I think this is the point, is even in a success case, moving a successful discovery which can be won forward as a development would require the company to raise tens of millions of dollars to support its development expenditure going forward. So again, very significant exposure to dilution point forward. It allows us to exit a jurisdiction where there are low prices relative to other investable markets. And I think the real comment here is that this allows SCIROCCO to access other markets with potentially more beneficial risk reward for SCIROCCO. And I think it's about that flexibility that we can access through pursuing sustainable energy assets that we've laid out in the past. And then finally, it provides near-term, non-dilutive injection of funds into the company to meet those cash calls until such time as the transaction can be completed. And I think, as you'll hear throughout this presentation, the board have been critically focused on the impact of dilution to shareholders. So I think to provide some context for that, the board has outlined a strategy to go forward to generate a cash generative portfolio of assets in the renewable and circular space. And we've already delivered an initial investment in that. And I'll come on to talk about this more, about what comes next. But we fundamentally believe that is a strategy that is deliverable. It can attract capital investment at reasonable cost, and it is much more in our control and deliverability than pursuing a single asset E&P play in an African jurisdiction. So I'd really like to switch tack now and talk about the way forward, and that's what the company will get after on approval of the divestment of Rovuma and allow us to build the business that we have already set out the stall for. So I'm not going to talk a great deal about this slide. It'll be very familiar to existing investors and shareholders, but effectively we are seeking to build a series of platform companies that hold cash generative assets in the sustainable energy and circular economy space. The three pillars that we're looking to put money into include energy, where the primary function is to generate energy in a sustainable manner; circular economy, where the assets effectively extract or recover valuable components from a waste stream; and vector, where assets are involved in the storage, transmission and delivery of power, usually associated with low carbon systems. EAG fits firmly in the energy space, anaerobic digestion as a provider of energy, whether it's in the form of biogas or converted into electricity. And also, as we expand on the digestate management and nutrient recovery element, that will provide us with very interesting investment opportunities in circular. In terms of the investment approach and the sort of master plan for each platform business, this is what we propose to do. We're going to work together with management teams who have deep domain knowledge, know what they're doing in that marketplace, to acquire a portfolio of assets that have the right criteria around cash generation, low risk and repeatability, optimize the performance because the team we work with will know what they're doing, optimize the balance sheet, and in growing the portfolio, looking at the graph in the center, you can see how the sum of the assets purchased plus upside generated from optimizing the assets and efficiently refinancing those assets can create significant equity value improvement. And I think if we look at EAG as the first example of those platform businesses, it has a very experienced team in the anaerobic digestion space. It has a strong pipeline of opportunity to get after, very clear path to upside identified, both in terms of optimization on the existing AD plants, but also in terms of adding nutrient recovery and creating a whole additional revenue stream from these properties. And then appropriate leverage as you build that portfolio. So it's a poster child for what we want to do in a number of other areas. This slide really just, it's got a lot of information on it and it talks about EAG in quite a lot of detail. EAG is a private company that's set up to acquire a portfolio of anaerobic digestion plants. Its first asset was Green & Generation Limited, which owns a 0.5 megawatt plant. Since EAG has owned Green, in part helped by very strong power prices, we've already seen a significant improvement in performance from estimated annual EBITDA of £450,000 to now a run rate of £600,000, which shows very significant relative performance improvement. that also corresponds to a number of investments and improvements that the EAG team have made on site at that asset. In terms of the forward pipeline of opportunity, which I think I want to really kind of focus on here, is that EAG have been working in the background to develop a very interesting set of opportunities to get after in terms of follow-on investments. And that includes 3 additional AD plants where they're carrying out detailed technical and commercial due diligence. We've also developed opportunities to deploy the digestate management nutrient recovery equipment alongside SEM. And EAG has identified 7 merchant installations of that nutrient recovery equipment on third-party AD plants, which provides that circular stream of investment that I mentioned a moment ago. And then finally, on green alone, EAG is also planning to install a nutrient recovery system. And to give people a sense of the economic uplift that's capable of being delivered here, we've inserted here that adding nutrient recovery has the potential to increase EBITDA for that Greenon site from the 600,000 current annual EBITDA run rate up to around £1.5 million per year once it's fully operational. And that's partly because the product from that is high value, high nutrient, organic fertilizer, which many people will be very, will understand with current situation and macro situation, that's a high value product. So the master plan here that I would apply in general to a number of different areas, and people will be familiar that I've talked in the past about looking at other sustainable energy assets as well, including wind power, electric vehicle charging, assets involved in the distribution of hydrogen as that system grows. There's a 4-step plan here, and it recirculates value as we go forward. First is to establish a joint venture platform with a management team that have deep domain knowledge, then to support them to acquire assets and optimize performance, identify technology levers where we can add significant breakthrough value to those assets, and then recycle that cash flow both internally in those JVs to acquire more assets, or recycle that cash flow back through SCIROCCO Energy into other platform companies. And basically this is the virtuous cycle that I expect SCIROCCO to pursue in investing in sustainable assets going forward. So really, I'd just like to conclude the presentation and then I'll move on to Q&A. But I want people to be very clear, if it wasn't already clear, about the board's recommendation here and what we believe is the best outcome and the best way forward for our shareholders and for the company as a whole. As far as I'm concerned, SCIROCCO is delivering on its long communicated strategy and has now delivered a transaction to dispose of Rovuma on the best available terms, which provides money to be recycled into its wider business and completely in line with its sustainable energy plan. The board therefore recommends that shareholder votes in favour of the transaction for the reasons you can see listed here. It provides a source of funding for cash calls. It allows the company to avoid raising equity at what I believe is likely to be a highly dilutive level. The phased milestone payments in the transaction allow SCIROCCO to see value as the value of the underlying asset is proved up over time. And in a success case where a development is approved and brought into production, it offers up to $16 million in total value to SCIROCCO over time. I want to be very clear as well, my counterpart is what are the consequences of voting no? And I just want to be very clear and pretty blunt here that a no vote removes access to that loan funding. So that means the company needs to fund those cash calls through another way, and the only viable option would then be to immediately raise equity, approximately equal to its current market cap, to fund the entire remainder of the work programme. And I want everyone to be very clear that there's no guarantee that sufficient capital will be available. That increases the risk on the company has insufficient money to meet its obligations within the Rovuma JOA, and that also raises the risk of default at the asset level, which would clearly be a catastrophic result for the company and its shareholders. I also want to flag that there's no guarantee that capital will be available at a reasonable price, and that has a read-through directly into the level of dilution that existing shareholders would experience in raising that capital. So the last thing and what I want to close on before we move on to Q&A is that I'm going to reiterate the recommendation that of directors and management that shareholders vote in favour of the proposed transaction to divest Rovuma at the EGM on the 29th of June 2022. So that's the end of the presentation. I'm happy to move on to Q&A.
Tom, thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while Tom takes a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Tom, as you can see, we've received both a number of pre-submitted questions that were submitted ahead of today's event, as well as a number of questions that were submitted throughout today's presentation. Thank you to all the investors for submitting their questions. And Tom, if I could please just hand back to you just to run through that Q&A tab, and where appropriate to do so, if you could please just read out the question and give your response, and then I'll pick up from you at the end. That would be great. Thank you.
Sure. Okay. Thanks, Jake. Okay, I'm going to work through the questions that we've got, pre-submitted ones, and then I can see there's 2 or 3 that have come in here, and I'm going to try and get through as many of them, if not all of them, as I can. The first question relates to capital gains, and I'll just read the question out. Will SCIROCCO be exposed to similar capital gains tax like Aminex was when they concluded their farm out to ARA? And the simple answer is no. We've structured the deal in a way that we would not expect to pay capital gains tax. And one of the Tanzanian authorities that we'll engage with through the course of the completion process alongside Wentworth is the Tanzanian Revenue Authority, to clarify that. But our expectation is no, the way we've structured the deal will not crystallise that. There's a couple of questions that I'm going to kind of group together here, and it's thematically they refer to the nature of the deal, and so I'm going to try and roll them together. One is about, would it have been better to have reduced the final payments and have a small percentage free carry, and there's some along the same sorts of deal. Wouldn't it have been, why do you believe this is the best deal available to the company, and why have we accepted a deal that doesn't cover the expenditure historically on the Rovuma project? So I think there's 2 or 3 points that I would put forward to answer this. I mean, as I covered in the presentation, we've been actively marketing this asset since early 2020. We've talked to a number of potentially interested companies. We've narrowed that down over time. Through 2021, we had a pretty mature conversation with a private company, having whittled it down to that point in terms of relative interest. And what I'll say about that process is that it was broadly similar value and a similar structure to the one here. We then, when unfortunately that opportunity went away, back in 2021, we re-engaged with Wentworth, and we've been negotiating with them since then. And what I would say is that the deal we've got here is what the market has offered. And so you can take it from me that we have tried pretty much every available structure, including farm out, including milestone-based payments that you can see here, including a complete takeout, including retaining a section, and all of those have been tried. But fundamentally, we're unable to accept an offer that isn't offered. And this is the best available proposal to the company for Rovuma after what I would describe as an exhaustive search and test of market appetite. I think what that shows you is, you don't run a process for 2 years to sell an asset if there is deep market depth in terms of competitive pressure and viable interest. And what we've basically demonstrated over the last period of time is it has been a difficult path to achieve an offer capable of acceptance from a capable, funded counterparty in the where I believe Wentworth's a very solid counterparty, and actually reduces the risk of completion. So scrolling down through the questions here. When can we expect a further anaerobic digestion investment? Following a successful vote at the general meeting, I would expect us to get straight after supporting EAG in the first instance. I've mentioned already in the presentation that there are a number of opportunities they'd like to pursue, and I would certainly hope that we would get start eating into that backlog through the second half of this year. There's a question: are you surprised by the seemingly low level of interest? And do you have any comments as to why that might be? I think I've probably just covered that. I think if you look at the population of companies that have exposure to or are interested in Africa as a whole, and then look at the subset that is involved in sub-Saharan Africa, and then look at the subset of that is interested or has appetite to be involved in East Africa rather than West Africa, because they're quite different markets. You start to go from a moderate population down to a small population down to a very small population, and I think it's just that simple. And the nature of the asset, as I've described in the presentation, although it has a discovery well on it in one location, the Chikumbi well is not a slam dunk discovery. It has some uncertainty geologically around it, and the risk profile that goes forward from there is not for every company that may have appetite to play in East Africa. So I think it's about a numbers game coming down to viable, interested, and capable purchasers, and I think that's why we've ended up with Wentworth, who happen to be strong counterparty, funded, ability to meet their obligations under the purchase agreement as and when they fall due, very well connected, and with a strong appetite to grow in Tanzania. So I believe they're very strong counterparties that will reduce the risk of completion. Question: do you believe there would be more interest and more value in divesting your interest upon successful completion of the Chikumbi well later this year? I think I'm going to answer that question in two parts. So the question presupposes that Chikumbi well will be successful. And I think that's a very significant assumption to make. It is by no means guaranteed that Chikumbi well will be successful. I'm not throwing shade at the asset that SCIROCCO has owned, but there are material, geological and subsurface uncertainties, which mean that there might not be a discovery well at Chikumbi 1. So I think it's important, and it's dangerous to assume and lock that in and then make assumptions on behavior, value, or the way forward that assumes Chikumbi 1's a discovery, because it is not a given. And I think, and I think that the second part to that question is, well, do you think you'd be more interest? Potentially, and potentially more value. But at that point, we would have had to dilute, take in new money to fund the obligation and be exposed to that risk. And that fundamentally, from a risk reward perspective, and also taking into account our investment strategy, was one that the board did not feel was in the best interests of shareholders. In a similar vein, you refer to the ongoing risks associated with progressing the project. What are you referring to there? So, what we're talking about is a gas development, or a prospective gas development. There is a discovery well on the block. Chikumbi well is being drilled in an offset location to test the extent of a gas-bearing structure in the subsurface. That gas-bearing structure has been picked on historic 2D seismic that does not give you great granular information about the subsurface. That's why ARA is in the process of preparing to and finalise the seismic shoot. That will give much more information, and then the well is to test that location to test the aerial extent of gas discovery. As I've already said, it's not guaranteed that that location will yield a discovered well, and that would obviously make the potential accumulation smaller, or at least proven not to exist at that location. And so one is subsurface. I completely acknowledge it could go both ways, but a significant uncertainty that the aerial extent of gas at this location or on this license is smaller than has potentially been anticipated. Then you move into the development cycle, which is you need to work through approvals, permissions, capital budgeting in an inflationary environment, in a jurisdiction where it can be difficult to get equipment mobilised and also expensive to get equipment mobilised. So there is uncertainty around the cost and timing of the development programme. And then fundamentally, there is ultimately production risk and operational risk about how that development is executed, how the production starts to flow, and what and how much gas flows at what rate, and then developing what revenue. So there is a series of risks. And again, these are general statements of uncertainty. And I'm labouring the point to flag up how the board came to the decision that that risk-reward profile over that extended period of time, with the increasing capital exposure that it would need to raise, is not in the best interest of shareholders as a single asset focused risk for this company. Our role, and what I believe to be my role, is to provide a sustainable path that offers good risk reward to investors. And that's what we've instituted in the form of the presentation that I've just described in sustainable energy assets. Within our control, where we can access capital to progress it, and we can progress in bite-sized pieces that don't pose existential risk to the company. Did you explore the possibility of raising equity to fund SCIROCCO's continued interest? I think I've answered that question. What is plan B with regards to Rovuma in the event this deal does not get voted through? I think I probably made it clear in the presentation. I think it would be an exceptionally bad result for the company. I think it's a potentially existential issue for the company, given the risks that I've already posed. A no vote for this transaction removes that loan funding. The company will then be forced to raise equity. There's no guarantee money will be available in sufficient quantum. There's no guarantee at what price that will be available and whether it will be reasonable. And so any money we do raise is likely to be extremely dilutive. And then we have a series of the risks that we've just gone through. So, I mean, that is why the board is strongly recommending to proceed with a yes vote for the transaction, so we can get on with the stated shareholder-approved investment policy. Another question here, why wouldn't we insist on a retained percentage of the Rovuma prospect at the same terms as Aminex? As I've already said, you can only accept an offer that's actually presented. Believe me when I say, we've been talking to Wentworth since late 2021. In that extended period, we have tried and tested a number of different structures. And at the end of the day, we can only accept the structure and value that is offered by the counterparty. There's a question here about have the Zubirs showed any interest in offering similar terms to the Aminex deal. I'm not going to comment about any particular prospective purchaser. I think as I've already described, we've talked to a number of potential purchasers, and we marketed the asset very heavily within the community of companies with interest and appetite for Africa, Sub-Saharan Africa and Tanzania. And the offer for the proposed transaction with Wentworth is the best available transaction. There's a question about if the disposal is equivalent to a 200% premium over current market cap, why do you think the share price has not moved and remains at a multi-year low? I think one thing we have to acknowledge is there's remaining uncertainty due to the EGM vote. And until we're through that and we have certainty on which direction we're going on, I can completely understand why people would be reticent about buying into the story. As I said, the obligation to raise significant cash at a potentially highly dilutive price, it represents a very significant overhang to the story. And until we're through the EGM, I don't believe we'll actually have the ability for the share price to respond. There's a question also, do we retain NT1? So we completely divest of all assets involved in the Notoria concession, including Rovuma. So I think the answer to that is no. There's a question here, do you think you've received enough assurances from certain investors to lead you into confidence that you will get this vote passed? What I will say is, as it's already stated in the circular and as stated in the publication materials we released on Monday, is that we have irrevocables from the board to support and vote in favour of the transaction. which amounts to a little over 3%, and we have letters of support from other shareholders, which means the total support is around 14.4% of stated support at the point of announcement. I believe we'll have other shareholders that also vote in support. We've received indications privately that there are other shareholders who have intimated their support for the transaction, but that are not included in that number. Well, there's some questions here, but I'm trying to discern what the actual question is. Why should the shareholders trust the board and what they say? So I think that presupposes that there's a fundamental mistrust. I can only sit here in front of you today pointing to a timeline where I have communicated consistently, and I believe with principle, about the objectives for the company. And I've laid out a pathway and delivered on that in the form of the first investment, which I believe represents opportunities for fantastic returns on invested capital over time that can be done in a low risk manner, bite-sized chunks, building a significant portfolio, delivering immediate cash flow with levers to add upside. And everything I've done, everything I've said along that process has been internally consistent and has been fairly and honestly represented to you. I think that's the only way I can answer that question. I disagree wholeheartedly with the assertion that over the past 3 years, the boards are the only individuals who've benefited. I understand that the share price has not performed as any of us would have wished. It's been a difficult period for SCIROCCO, and it has taken 2 years to find a buyer for Rovuma. Let's have a look at other questions here. There's one question here, and I'm actually going to read it. Why can't the company take out a massive loan with massive dilution to get us to PLC sign off, or better still, have a deal where we retain a percentage of Rovuma? I really can't make clear enough that we have been through a number of iterations with a number of counterparties over the last 2 years. And the offer that is presented here with Wentworth as a counterparty and the terms I've presented here is the best possible offer for Rovuma available in the market. There are no options to retain a piece because no one offered that. There are no options to get a better deal at this point because no one offered that. This deal has been negotiated and delivered over a long period of time in quite tortuous negotiations, and it is the best available deal at this time. And I think, oh no, and actually just to continue on that question, why can't we take out a massive loan with massive dilution? I mean, I think the clue is in the question, and if I haven't made my view on the negative impact on dilution for shareholders as we are about stepping off point to move into growing a portfolio of cash generative assets, I'm not sure what I can add to that. I think it would be inappropriate for us to dilute existing shareholders out of sight just for the principle of participating in a well, which, as I've laid out already, I don't believe represents for SCIROCCO and our shareholders a good risk return going forward. There's a question here about how much will NICE be paid in total for working the proposed deal. So NICE will be paid. They've advised on the deal and they supported the company over the last 2 years during some fairly tortuous negotiations, and they will be paid a standard corporate finance fee in relation to the value that accrues to the company over time. I think I've now answered all the questions that are here.
Tom, that's great, and thank you very much indeed for taking the time to address all of those questions that came in from investors this afternoon. And of course, if there are any further questions submitted today, we'll make these available to you immediately after the presentation has ended for your review. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform, and you'll be notified by email when they're ready for your review. Tom, perhaps for redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Okay, so I mean, listen, I'm very pleased that people joined the webcast today, at the end of the day, the shareholders own the company, and I'm trying to communicate what I believe to be an efficient and positive way to take the company forward. I know for long-term shareholders who have followed the Rovuma story and they want to retain that asset, but I really can't stress enough, we've been very clear and consistent about our communication and our intent to sell it. And although it's taken a lot longer than expected, I believe this is a solid result, and I continue to restate the recommendation that people vote in favour of the disposal at the EGM on the 29th.
Tom, that's great, and thank you very much indeed for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SCIROCCO Energy PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.